The U.S. Treasury has made a big announcement that should help bring rates down. And your buyers and you as an FHA buyer, can you occupy a home before you close on it? We're going to get into that in today's video. Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for August 19th, 2026. I have some notes here. I'm going to read through some of it, give you some input on some of it, and we're just going to go from there. I'm going to edit this video and take out the long droney parts, okay? One thing I want to do is, over to my right here, I'm going to pop open a few charts. Chart number one is what's happening in the last month. In the last month, trading for the most part has happened within a range. Right now, we're in the middle of that range, and today's movement was down significantly because of an announcement from the U.S. Treasury that I'm going to get into. But with that being said, it's trading in a range for about 30 days. That means for us, for about 30 days, government rates are in the fives, high fives, but they're still in the fives for no origination or no discount. Check your email, your rate update email, and it'll give you the exact APRs and everything else. Conventional is right in the middle sixes slash higher end of the lower sixes, depending on your exact scenario. So for example, I locked one low sixes last week, and that was no cost or very little cost, but that was a specific scenario with a lot down, and there's a lot going on there. So we're just going to call conventional mid-ish sixes, maybe a little bit on the lower side. I want to show you a different chart here too. So this chart is going to be 1 year of history. Now, if you notice that 10-year Treasury comes down a bit, it's down through last winter, and then the problems happened in the Middle East, and you're going to see the 10-year Treasury come up, it spikes, it comes back down again, and then it starts to come up again, and then it starts trading in that range, okay? The 10-year Treasury going up and down has an effect on rates, but they're not mirroring each other exactly. They're kind of closely correlated, but not exactly. So for example, the last month, again, we're in the high fives for government and mid sixes to lowish, midish sixes for conventional. So, oh, by the way, rate-wise, we're doing a lot of comparisons right now, and we are seeing about 3/8 to over 0.5% lower in rate for the same cost. It's kind of ridiculous, but at the same time, we're just lower. All right, so let's get into the first item here. The Treasury is making a big announcement, and this announcement actually should bring rates down. The announcement is as follows. This morning, the U.S. Treasury announced that it would double its buying activity of some of the older long-term bonds. Now, in theory, this is going to bring a decent downward pressure on rates. So, again, we talk in pressures. If the 10-year Treasury comes down, downward pressure on rates. Oil prices, if oil prices go up, upward pressure on rates. Why? Because oil price goes up, energy costs go up, therefore inflation goes up, therefore money's not worth as much, slash rates go up. So there's always these pressures up and down, and the 10-year Treasury and the U.S. Treasury making that decision to buy some of the older notes back, same thing, pressure on rates. So a downward pressure from that piece of data. Now, it moved a lot this morning, but we'll see if that trend holds into next week. So we'll recap this again next week, okay? Number two, NAR pending home sales dip in July. All right, so I'm going to read this from NAR, and that is, in essence, they're looking at pending sales fell 2.3% in July. I'm not going to read this whole thing, but the summary is mortgage rates hit the highest that they have been at in the last year in July, and before that they were upticking pretty heavy in August, June, July. It actually has kind of been moving up for about 3 or 4 months, and that suppressed buyer behavior. So you're seeing significantly less buyers than you were before, but the interesting part is refi apps overall are actually up for rate term refis. We're actually seeing a lot of those rate term refis, and that's where somebody bought a loan from another company and they're in the 7s, and then we're currently putting them in the 6s or high 5s, depending if they're VA or conventional. But we're seeing some of that refi activity as well. Pending sales remain 30% below pre-pandemic levels of 2019. That's pretty decent data, and we've all seen that before. If it's news to you, you probably need to read a little bit more on what's going on. But NAR is saying that current pending sales is roughly 30% low before the pandemic. Now remember, the mortgage industry, real estate industry, for the most part, they're going to look at pre-pandemic levels as an indicator to see if we hit a reset. Mortgage-wise, when government rates for us are low fours and conventionals high fours, that's when we've hit the reset button for pre-pandemic versus post-pandemic supply and demand of cash and interest rates. Okay, so again, government low fours, conventional owner-occ high fours, investment low fives. We've talked about that a lot here at Low Cost Mortgage. Let's get into the next part here. We don't care about that. Fed notes. So Fed notes came out at noon today, and again, it's August 19th, but at noon today, the Fed notes are as follows. These are just a few of the ones that really affect rates. The Fed is expecting inflation to come down, all right? So what that means is the rate schedule that they have for increases or decreases, they're going to keep it the same for the rest of the year. That's good for stability. With stability, investors feel more comfortable pricing rates lower and lower, okay? Now, rates are tied to inflation numbers, and gas and energy and other things. But inflation, like we talked about earlier, is a big push on up or down pressure on interest rates because it has this, if inflation is up, the Fed's going to increase the Fed rate. Now that doesn't directly affect mortgage rates, but it has a pressure up or down on mortgage-backed securities as the money follows through the different aspects of the money markets, right? Now, economic outlook is down, and that pushes rates down. So economic outlook is down, downward pressure on rates. Bi-monthly meeting moving forward. So the Fed is going to meet bi-monthly moving forward, and that's going to allow them to get more data together. So 2 months worth of data, then they're going to have a Fed rate interest discussion, more meetings, but they're going to make sure it's on a bi-monthly basis moving forward. Okay, FHA. I just recorded something that was long and way too long, and I don't want to bore you with those details. So here's the summary of it. Remember, I was a realtor, so I'm understanding your positions on it of what you need to know, what you don't need to know. Here's the skinny. If it's an FHA buyer, you can occupy the home with a pre-occupancy agreement that's associated with a contract as long as the buyer is occupying the home after the contract is signed. We have investors that will do that. We've worked directly with HUD on the FHA program. The 4000.1 is the guideline for it, and we have specific guidance from several higher ups at HUD that allow us to do that. So if you're having issues with an FHA buyer where they want to occupy that home before closing, we can do that. Now, other lenders probably can't. There's some caveats to that rule, though. One of those is identity of interest that pops in place if they're leasing the home and then they go under contract on the home. That's a big no-no. If you do that, you have to wait 6 mortgage payments. You have to wait a period of time to season the ability of that buyer who's renting to buy. But if there's a contract and the buyers want to occupy before, whether it be 1 day, 2 days, 1 week, a month, or in this last case, 3 months prior, yes, we can get that loan closed. In fact, we just closed it earlier this week. So FHA, quick summary. Can you occupy the home before closing? Yes, you can. It depends on the details. If your loan officer says you can't, and if you go on AI and search right now, it's going to say that you can't, and this is part of the reason that AI can be bad for the mortgage industry is it doesn't actually tell you everything you need to know. Not specifically. It doesn't know enough to actually give you good guidance on specific rules that are there, okay? But in short, FHA, can you occupy before closing? Yes, you can. All right, so we covered a few things. Mortgage rates, we're still in the high fives for government. We're busy. There's a lot of lenders that are busy. There's some that are not. There's some realtors that are really busy. There's some that are not. But in recap, the realtors that we're seeing that are closing the most loans are the ones that aren't letting the news of a down market affect them. Instead, what they're doing is they're focusing on those core items. Market, market, market. Where's my next sale? Where's my next sale? Always looking for your next deal. Those realtors are closing more and more homes. The ones that are sitting back saying, no, it's not really a great market, everything's repressed, I'm going to take some time off. Those are the realtors that aren't really selling so much. Oh, we're also seeing a different differentiation too. A lot of your established realtors that have a large book of business, they're picking up a lot of listings, but the listings are sitting because it's a buyer's market. But they're agents that are a little bit newer that might not have that big book. They tend to be more buyer heavy. And of course, we all know, since the pandemic ended, this is a buyer's market, and more so now than ever. The amount of, and I just said, I don't like to do that, but the amount of seller concessions we're seeing on deals right now, it's a lot. It's a lot. And it does say a little bit about what's going on, but at the same time, we've seen homes that are listed sit on the market for 4 months, 5 months, 6 months, upwards of a year. We've seen houses, you've seen houses go on the market and they're under contract in 2, 3, 4 days. So you are the experts on pricing a home. You are that. We at Low Cost Mortgage, we're the experts at closing the loan or doing financing on the loan if you guys need it. All right, my name is Mike Florin. Have a great day. Go out there and find some more deals. I'll talk to you later. Bye.